What is going on? I would like to welcome everyone who is basically here on this channel. I have switched over from my personal channel, which is my basically original channel, over here. Yeah, so this was basically all of my videos, basically, ever since about June, I think July, the beginning of July, July, August, a little bit, so, running on almost 3 months. And yeah, so now I'm deciding to switch over from this account to this one I'm currently on, which is, if I can pull this up real quick, which is it's doing a bunch of garbage. But yeah, today I have a crazy trade recap to go over on the day. Yeah, a bunch of crazy stuff to go over. First, I just want to get back to there. Really, there's no reason for me to even get back to there. But yeah, this is the new channel. So welcome, and if you're subscribed already, then unsubscribe or stay subscribed. That's up to you. Let's get straight into the day today. So today's FOMC, big day in the market. A lot of stuff going on. The Fed was expecting to cut rates, and they indeed did cut rates, but that's kind of getting ahead of myself. So coming into pre-market, I am bearish to fill in this big old contract switch inefficiency. Market open this morning. I was looking for shorts, and I was only trading one of my top step combines. It wasn't even an XFA. But you can kind of see here, we have consolidation overnight. We have this larger time frame order block up above. We break below around 430, put in this long-term low, consolidate, and then New York session opens, sweeps this high immediately, and then starts to reject lower. And as soon as we basically sweep that high, I'm looking for basically shorts. I want to see, if price is willing to give me an entry here, reverse into here, or if, in this case, it wanted to melt. So since it melted and price wanted to obviously be, a little more bearish than expecting, where are we? A little more bearish than expected off open, I'm basically looking for an order block. On the 1 minute, we didn't tap into any order block to the downside. We just broke structure right here, and then we didn't even retrace into any breaker blocks. I mean, I guess you could say this is a breaker. However, no larger time frame order blocks. So knowing that, I went to the 2 minute time frame and I found my order block right off 9:30 open, which basically holds these long orders that got put in here. So price is naturally attracted to this level in order to basically fill more orders and head lower. So then this is where we can head to the top step. Not there. I don't know exactly where this trade is at. Or on which account it's at, matter of fact. Yeah, right here. Okay, so right off rip, we get my 2 fair value gap set up. 1, 2, I take a short, another short, and then we take profit at this low. That's about, I risked about $20, $100 win on there. I was de-risked heavy because I didn't want to, basically, this is kind of like a little fun practice day. And then once we get below this low, sweep that low, I'm looking for, the way the model works on the larger time frame, my model, order block. So we get this sweep, in this case right here we get our sweep, then we get our order block, which is our return into here, and now I would expect 2 fair value gaps to get put in. What happens? We get 2 fair value gaps on the 2 minute, 1, 2, and we break structure right here with this candle to the downside. So everything is telling me bearish, and I just took profit, and I'm trying to see this lower fair value gap get filled. So I take a long to this, and this is basically my profit target, or necessarily I would say break even. This is a 15-second trade. 15-second trade. Yeah, so 2 value gaps, and I thought we were gonna get up there, but like I said, since it's the manipulation leg, the one that's not the real move, it's gonna be dirty. It's not gonna look nice. It's not gonna look pretty, and in this case, it didn't look pretty. So eventually, once we did sweep this high, which we stepped it right here by the tick, I immediately moved back over to shorts, so we can target our internal low that we put in. So I shorted twice in here in this double fair value gap, and then it came back to me break even. So then I was like, okay, we still have this double fair value gap holding up. I would like to see us still go lower, basically sweeping this internal high. So I shorted early here. This is a mistake. Then I shorted again, which I could be acceptable. However, it is still a mistake. This is the real model right here. So once we fully sweep this high and tap into this 15 second order block, we put in 2 fair value gaps and then take a sell, target the downside, and then make another $100. So $100 win, $50 loss, break even, $50 loss, or like no, $25 loss, $25 loss, and then $100 win. So it equates to about $200. But that was just the fun we had this morning on AM session, because I wanted to save my evals and basically my risk management in order for the FOMC PM session. Now let's get into the nitty gritty. This is where we get into the actual not even embarrassment, I would say tragic. It was pretty tragic. Basically, FOMC starts around here 135. We get our funds rate announcement, which basically sends price railing to the upside, which leaves us with some buy side, relative equal highs, and then we start to rally to the downside. When I see this rally to the downside, I'm hopeful that this gap will get filled on this larger time frame. So in this case, from right here up to here, I'm hoping that gap will get filled. Why is this so off? I'm hoping that gap will get filled. And it did, basically immediately, but then our next candle, swooped in. So this is where I'm going to go to the 1 minute. So what is the rule? You don't engage pre 245. You don't engage 245. You want to wait and see what that real leg is going to be, because most likely we're going to take our buy side and sell side in the move. So our buy side is ran, our sell side is ran, and then once again we run up internally, and this reversal right here is one of the most important factors right here. This reversal based off of this 5 minute order block, and that's pretty much it, is basically a future order block looking ahead. So I'm expecting this high to get ran through after we come back again and take the sell side. So once we come down again, I see sell side get took. It got taken right here, and there was like a looking for a setup in here. I was looking for a setup, but our fair value gap got ran through, and it was not it wasn't good. So we put in 2 fair value gaps on this up move, but if you look on the 1 minute, this is now an order block, and we should come back down into that order block and then put in our 2 fair value gaps, which we didn't. We melted lower, took sell side one more time, which basically that was the trap in the market. Boom. And then as you can see, that was our trap. Turtle soup ran to the upside. There was no entry in there at all. So I'm thinking that I'm going to be able to find a 3 minute or 5 minute trade, because of the fact that the 1 minute is so bullish. There's no reason for us to go any lower into this 5 minute order block, into this 3 minute order block down here. There's no reason. Now, this is where it gets a little complicated. Remember that high I said earlier, right here. This bullish up close candle is an order block to the downside. This is our order block to the upside. We disrespect it, turn it into a breaker, we go lower. This all makes sense. But now, I would, in a bear situation, expect this up close candle to not to respect, but to hold price down so we would turn over from there. However, we broke through it. So now I have my order block in my model basically checked off. So, my model is very reliant on an order block on a larger time frame, because that's kind of the fact that price will excel to a certain point. But this is not necessarily, it's an order block, but it's a breaker block. They're kind of the same, but a breaker block is just an inverse order block. Regardless, we come down, we put in this high, we put in 1 fair value gap, and we put in another fair value gap. And as soon as I see that, I'm like, okay, I would love as soon as this 5 minute candle closes, I was like, I would love for price to come down into this 5 minute so I can find something on the lower time frame, like the 5 second, 15 second, 30 second. And yeah, that was basically what I was looking out for. And plus, we have this breaker block to the left that's aiding price at the same level as this fair value gap. So this is where we go to the top step, and I'm about to show you a miracle real quick. We go to top step. We see that we have everything checked off. We have our liquidity sweep, which was internal liquidity at that 5 minute fair value gap and 3 minute fair value gap. We have the order block, which is or breaker block, which is that 3 minute order block that we breaker block that we inversed, and that's basically all we need. And after that, we go to the small time frame and we see where price wants to go, larger time frame. What do? We see the same thing, a sell side sweep right underneath this low. This is where it starts from the beginning, right here. Hold on, let me see. I believe it was on the, trying to see, yeah, okay. Oh no, interesting. Okay, so I did think there was an order block in here, but this is our order block, our downside order block. But we never wanted to tap into it because of the fact that we had that higher time frame order block, so our price is very heavy. Regardless, this is what I'm gonna get into. We have this entire down move right here that I'm basically identifying as our order block. If we look and see, like, these two down close candles are not that important because that wasn't the sell side induction. This is the sell side induction. And what happens? We close above it, and when we retrace immediately back into it, and we excel. When I see this exhalation, I'm like, okay, this is nice. We have one fair value gap right here, and then we have another fair value gap right here. That's the model. Liquidity sweep, order block, all that stuff, two fair value gaps. As soon as we get basically this bullish candle close out of that fair value gap, took the long, and then once I got more confirmation, took more long, and then one more contract to make my risk even at $100. Once price ran up to about, I don't know how many points this was. Okay, we'll subtract like 10. But price ran about 40 points. I went break even, and I was very, very confident we would take this high. At this point, I was up about like quite a bit, about $500. I'm not even gonna say anything about that because there was another setup right there. But yeah, we basically ran up, went break even, and it came all the way back down to our break even and stopped us out for basically $2.32. And then once I saw that we wanted, I wasn't expecting this entire down move. I was floating about $600, ready to go, pull it out. Nah, nothing. Not even a partial. I didn't partial anything because I was confident we wanted these highs. However, that's when we get dirty. Once we're part of that second stage distribution. Once that second stage distribution comes in, it gets a little more messy, and that's that's just kind of the implication of what happened. However, then we took another long. Once I saw us come down, sweep this liquidity in this order block, we tap back in this order block. This is now a propulsion block, and then we get two fair value gaps. And I long in this propulsion block. So as soon as we get above this propulsion, I long. And then as soon as we put in the double fair value gap, I long, and I put my stop loss at this low in order to be conservative. And then eventually price comes up, sweeps this high, and I'm like, all right, this does look nice. We should continue. I go break even. It comes back to my break even, and then runs to my take profit. So, what can we do better? There's nothing better we could do. Today was one of those days where, yes, it's hard. It's going to be hard to find a move. But we were able to stay completely patient through all of this chop. We were able to identify exactly when price is going to want to, present our model, because we waited. There was nothing. Like if I go to the 15 second or like the 30 second on this entire up move, there's nothing here. There's nothing there. Here's our order block. We don't even tap into it. We just break higher. We do get like a two for value gap, but that's not my model. I don't like that. This was the model, this internal retracement into this larger time frame. And yes, say for example, I wanted to trade this on the 5 minute, this model on the 5 minute, I wouldn't have even got a 1-to-1 basically. I basically would have got a 1-to-1, and I'm not risking a 1-to-1 after I just basically had a 1 to 7. So that's not my type of my trading. I like I said, I could have longed, and then yes, I would have made something out the market, but long term that just is not going to work. The way I'm going to definitely compound and make more and more over time is finding these very, very tight stop loss models. Like if I look on here in the morning session, say for example, I'm taking a short off of say this whatever fair value gap, and then I put my stop loss right down here. I could place 5 contract. Oh no, my stop loss would be like right up here or whatever. I'm risking $70 with 5 contracts, or 5 micros. But then today, once I go to this price action, 5 micros is now, that's my stop loss, tiny as heck with $100. So this basically was the trade. This was the trade. It was aiming for about $1,500 profit target about at this buy side, and then $100 risk. So the RR was insane, and yes, I'm not that excited or happy about the fact that this did not work out, but it's the fact that I can just show up and do what I gotta do, and the market will present itself another day to me. Yes, it would have been nice. We would have had a crazy start to after getting that payout, we would have been able to get this balance back up to 1,000, so I can start risking $150 consistently. But like I said, until I reach $1,000, I'm keeping my risk at $100. So that's just how it's gonna be. And even if I didn't move my stop loss, like that's not something I would have expected price to do in any type of fashion. That's why when we got this other push up, I was like, okay, this looks a little more promising. Maybe my stop out was just a result of me going break even, and it definitely was. But I really can't prevent that. I really don't know how to prevent that, essentially. Not necessarily, not knowing is kind of the hardest part. You don't know that price is gonna reverse for some reason and come all the way down back to here. For what reason, I don't know. And I genuinely want to figure it out. But on the 1 minute time frame, there's no break of structure. There's no nothing. We just start consolidating to this high, and yes, that makes sense. Consolidating to the high, so we can trap people who are selling. But I did not expect it to be that deep of a retracement after pushing up basically to the high. So it just doesn't make much sense. But if I go to the 5 minute time frame, you see, we broke structure. We had this bullish order block. We didn't even tap into it. And I guess you could say that was that. But we didn't even sweep my stop loss low. That's what I'm like. If anything, we would have wanted this low, and then we could start to move higher. Maybe on the 30-second or something. 30-second, we get this close right here. This is the order block. This entire down move is the order block. So I guess you could say yes. We broke structure, ran, coming back into the order block. Then we get our 2 for value gap set up, but that is not something I was expecting. From a larger time frame perspective, I was not expecting the 30-second order block to be wanted to be respected. And then also coming into here, boom, order block, and as soon as we tap into there, we get order block, tap into it, propulsion block, double for value gap. It's the same thing. Except I'm just going break even has been screwing me up. See, as soon as it's the same thing, bro. Except this time we didn't tap into the we did tap in the order block. But in this case, the propulsion block. Basically, look, order block, tapped in the order block, propulsion block, tapping into the order block. It has to be a smaller time frame, and then going higher with that 2 for value gap setup. And the same thing here, order block, break a structure, returning back into there. This is now my propulsion block. And as soon as we get above this propulsion, I'm expecting us to leave. I'm not expecting price to come down into this lower for value gap. I would expect it to respect this upper one, just like it did here. And then whatever, that's technically the long when it closes, and then it'd be like that. And is this a trade I want to take? No, this looks terrible. This absolutely looks terrible. I would have been about 2 points away from getting stopped out for about a couple minutes. Not something I want to be doing. But yeah, just messy. I understand that I was trading the second stage distribution, so I can't be as disappointed as something else. But yeah, that's kind of it. And then look, this is also a nice example. So, you know, remember, we're still long on the day. Like, I'm still expecting prices to you know, come up into that buy side, or, you know, at least take out some of this chop. But it's the same thing. Take out the sell side right there. What is a bullish order block defined by? A series of down close candles apt, and then we close above a high. This is now my order block. We tap into this order block. What am I expecting off a result of that? I'm expecting 2 fair value gaps. One. Get one fair value gap right there. And now I get another fair value gap down here. And now I get another one up here. So, in this case, what is this? This does not count. This is not a setup. There's 3 fair value gaps, there's nothing in there. But, say for example, if I go to 15 second, I might be able to see something different, which is nothing. So yeah, honestly, scratch that whole last idea. The matter of the fact is that, you know, it was messy, but the fact that we were able to risk manage smart, and just get, you know, break even, unfortunately, there's really nothing we can do about it. You know, maybe just not going break even after being 40 points in profit, you know. You know, maybe I'm just reaching, but that's kind of crazy. I'm just joking around. But yeah, you know, that's it. So yeah, welcome to the channel. Like I said, this was another account. I had a whole different theme, a whole different, basically, you know, niche to this. And then yeah, I decided to basically change it into a trading account. So, you know, if you see this from Transcendent Thoughts, you know, just low key, you know, either you unsubscribe or you stay subscribed, and, you know, you follow the journey. But yeah, you know, closing today off with basically, you know, first trading day of the week. Would have been a banger, but it's okay. You know, I'm not mad. You know, it's unfortunate witnessing, you know, 1K, you know, USD just completely vanishing from, you know, your eyes, just based off of you know, a tiny move to the downside. Like, all this mumble jumble was happening in this price leg right here. So, like, that's why I love these lower time frames. That's why I love the fact that the 2 fair value gap setup works like this, is because, you know, it makes sense. You know, say, you know, it makes complete sense. Sell side sweep, break a structure above this high, 2 fair value gaps with a breaker block on the 3-minute time frame, come into the 5-minute. As soon as that 5-minute upper fair value gap gets tapped into, I'm on that 5-second. I'm on it, and I'm hawking it. And I'm waiting for that order block propulsion and 2 fair value gaps. And if I get it, that's the result. If I get it, these $500 days are the result of it. You know, and being profitable is a result of, you know, identifying that and staying disciplined to only trade that, and, you know, to get that stuff going. So yeah, I think we're kind of long, but I kind of want to make a long video, a little introduction. But yeah, you know, that's all I gotta say. So until next time, I will see y'all tomorrow for the September 18th day. I believe we have some sort of 8:30 news. Yeah, we have unemployment claims, so we will see how unemployment claims goes tomorrow. Should be a great trading day. You know, like I said, trading is, the best part about it is that it's a new day every day. You know, no matter what your performance was, if we go back in history here, no matter what your performance is, you know, you always move your day forward. You know, first month of having this account, almost blew it, made some back, almost blew it, made some back. Good risk management week, tougher week, about only $150 loss, risk making some back, and then it would have been making some back, but it's okay. But that's the whole, I'm trying to get at the idea of, you know, showing yourself that, you know, finding your model and being consistent in it will lead, and being, you know, risk management. You know, if your risk management is not on par, then, you know, your weeks are going to be 500, minus 500, minus 400, minus 300, plus 500, instead of being break even, minus 150, $50. So yeah, I like where I'm at right now. I like my risk. I like what I'm doing. I just have to keep what I'm doing. And yeah, that's pretty much it. I will see y'all in the next video. Peace out.